Hi, I'm Jim Cramer with our energy expert Dan Digger. Dan, I always love our videos because you put out opportunities, and it looks like that the opportunities in natural gas, not for tomorrow, but for someone even taking a 6-month view, may be just too compelling to avoid.
I've said that natural gas is like oil building a base, but it's taking a much longer time to do that. So we've been kind of hesitant in giving out names, but there's a couple reasons. We talked in the last video about this thesis, bad is good,
right,
where we're looking for sequential drops in production growth in oil to make the entire market sort of clear the surplus.
Right.
In natural gas, we're starting to see slowly that kind of thing happening in natural gas as well. Plus, the shutdown of fracking operations here in the United States, the slowness of the rigs has actually taken some associated gas out of play. That seemed to add to what might be a coming small drop in production growth in natural gas, as well as a NOAA report the other day, and I hate to trade the weather, that in fact we're going to have a very cold winter.
Right.
Makes me look at some of these stocks, particularly Southwestern, for example, or Range, at numbers that are just incredibly cheap.
Well, the Range just sold a big chunk of property, so their balance sheet is good, right?
They did. They raised some money. They got $870 million for something that was assessed actually 3 years ago at closer to $3 billion in West Virginia. But again, bad is good. As you start to move assets out, less development, less production, you start to see maybe some of the surplus come out of the marketplace over the long haul. And at $32, for Range or $11 for a Southwestern, if you want a shot for the winter to try and make some money in the space, natural gas might be the place.
Southwestern was in the 30s. People thought it was going to get a takeover bid.
Yeah, exactly.
All wrong, huh?
Yes, indeed. And in fact, they did their secondary at the worst time. A lot of financial troubles. Did not see this price staying this low for this long. But, the assets are still there and the production
Chesapeake?
ability is still there. Chesapeake, again, tremendous problems on the bond side.
Yes.
But I own it. Full disclosure, it's one of my holdings. It's one of these speculative long-term holdings where I feel that as natural gas develops a base, they're not going to be one of the ones to go out of business.
I frequently get questions about a Magnum Hunter, which at one point looked pretty good, but obviously if Range is selling something that was $3 billion, Magnum Hunter, the common stock is a penny stock. That's not what you should be if you believe in Magnum.
Again, just like the oil stocks, we talk about all the ones that have gone under $1, and we're saying these are not going to be the survivors in natural gas. It's very much the same. I would put MHR in one of those categories, unfortunately, and put my bucks into what I think are going to be the survivors in the long haul.
Wow. Okay, great stuff, Dan. Thank you so much.
Right.